Okay, welcome everyone, and we're going to be going through the last part of Module 3, Order, Absorption, Reloading, and Iceberging. Specifically, what we're going to be going through in this part or segment of Part 3 is actually very short-term scalping and how we're going to identify it and then potentially execute a strategy around it. So what I'm going to be going through is actually looking at um, a setup in the Bund Futures where we're looking at a market going lower. There's going to be an absorber that comes in on the offer side of the market. And we're going to try and see how we can interact with it and show you guys a potential strategy for this. So what we're looking at specifically is very short-term scalps. Now, specifically, we want to look at what it looks like and the strategy, like we just said. So what I'll do is I'll play this little replay of the actual order flow that we have from the 22nd of I'm sorry, no, it's not it's the 13th of October 2015. It's around 230, 220 in the Bunds. So we're gonna, if you want to look back on that on a price chart, you could take a look at what it actually looked like from a very longer term perspective. If we just wanted to take a look at what the market was structured like on the dailies, as you can see in here, the market was pretty much uh, kind of sideways on that day. So this is the 13th. The market had been moving up in an uptrend, but more, really there's nothing in this area for us to say that we could potentially see longer time frame participants interacting. It's basically the middle of this range that we can see in here. So this is our support and this is our resistance on the dailies, as we can see there. So really we're in the middle of that little area. So it's really just a very short-term scalp, pure order flow, pure price action that we're going to be observing here. So do stay tuned into what I'm going to be saying. Try and keep up with what we're looking at, and hopefully we can learn something from this. So the market's currently trading, as you can see here, the market's currently trading 37s. It's at the lows of the day. So this is now our low of the day, but we're potentially going to see that move through the low of the day. It's offered 38s, bid 37s, as we would say, and we're currently trading at the lows of the day. Currently, we've seen some bigger size on the book. Not it seemed as if the book is quite heavy at the minute, but comparatively, we've got a little bit of size on the offer side. A nice little chunky bid there at 35s at 650, 640 lots. And now we've just seen those 35s get taken. So we're offered 35s, trading 34s here, offered 34s here, trading 33s, offered 33s. So we're making a small little move to the downside here. Let's see how the price action reacts around these levels here. So we've just gone through these 30s. We're trading 29s now, 30s now. So we want to see if there's any potential areas where we can just get in with this seller action, because it seems as if there's a seller in the market here and he's getting quite aggressive. So we've just taken out 30s. Someone's just lifted 100 contracts. Now, this is our absorption right here. Every time someone tries and buys at 31s, the market takes it off it again. So I keep reloading this price. Every time someone tries to put up more size, it can actually stay bid at 31s for longer than about 3 to 4 seconds. So we know at 31s and potentially 32s, as you can see, we're building a little bit more volume in this area. So we said 31s and 32s, doing a little bit more volume in this area. We want to potentially interact at these prices. So what we're going to do from a strategy perspective is we're going to offer, we've just been given 32s. We're going to offer 32s. We're going to hit market at 32s. and see if we can take a few ticks out of this. Now, obviously, from a strategy perspective, we're looking at very little risk. We want to take maybe 1 or 2 tick risks. And we're potentially looking to get out when the selling has, in the short term at least, exhausted. So we've been offered 32s. We knew there was a big seller at 31s. Every time, as you can see, every time someone is trying to lift the bids, I mean the offers, that the offers keep reloading and adding more size to it. As you can see, every 200 lot or 100 lot that gets lifted is just immediately getting reloaded. That's showing us signs that the seller is strong and he keeps wanting to sell more and more at those prices. So let's see how this reacts here. That seller is potentially coming a little bit more to market. The buying is kind of stopped. So he's probably going to try and get a little bit more liquidity by going a little bit more to market. If we can see any more signs of reloading, maybe we'll add a little bit more to this position and then potentially get out for a quick scalp a little bit lower. You can see now, even at 29s, now, every time someone tries and lifts quite a bit of size, we've had 250 contracts now traded at 29s. Let's see if we can go offer it again. If we can go offer it again at 29s, we're going to potentially join that offer there. So just join that offer there, 29s. Let's see if we could potentially get filled. We can't. We're not getting filled at the minute. We've gone offered at 28s and we're trading 27s now. The thing is here, you don't want to be chasing the market too much. If you've seen the market show you its hand, you don't want to get too aggressive unless there's really intensive price action. So we're seeing a little bit more aggressive price action here. We'll take out our offer there because we haven't gotten filled, and we'll stay disciplined instead of chasing the market. We'll potentially look to start scaling out a little bit of our contracts around this area because it seems that that's selling somewhat exhausted in the short term. We're not getting filled here. So we'll lift 5 contracts at 26s. We've got another 5 contracts still short. We'll try and move that other 5 up at 26s. Still a bit of reloading there at 27s, but look, now the buyers are actually able to take the market bid, and we've gone bid from 24s to 27s. 3 ticks now traded, 4 ticks higher off the low. A bit of an auction price process here. It's a little bit more two-way flow. So essentially, we're looking for the market to just come off a couple of ticks, fill us here at 26s, and that's our scalp trade from 32s to 26s. We've taken 6 ticks out of the market just purely off of the fact that at 31s, we saw a seller come into the market. He was aggressive in basically sitting at the price. He was just sitting at 31s and 32s. Every time someone would lift 31s or 32s, he'd add more size at 32s, at 31s, and you could see the amount of contracts we traded there. In comparison to the rest of the profile here, this is the highest traded volume node. So if you can see that there's size being done there on the offer in the direction of a move, there's potentially a few ticks to be taken out of it, and it's a good scalping opportunity there. So from a trading perspective, what do we see? What did we see on the price ladder? We saw, so if it's just from the short time frame selling opportunity, we saw anyone that lifted at the level or price, more contracts were added. So just quickly, were added on offer. So that's one of the main things that the main parameters that we see in this particular setup. Every time someone buys into the offer, the seller keeps adding more contracts. So that's the main characteristic that we're looking for. Then, that is our entry on our cover or exit. What are we looking for? We're looking for the selling in the short term to exhaust. And what does that potentially look like? market went bid / ticked up more than 3 ticks. And this is specific to the Bund, obviously. It will change from market to market. But as you can see, from a strategy perspective, now if we looked at what it looks like from a strategy perspective, what were we looking for? We joined the offer at absorption price / area. Now, obviously, it's going to depend. In a very short term, it could happen over, that could be one price, that could be two prices, it could be, it could be many prices, it could be 3 or 4 prices. But we saw it over 30s. We specifically saw it over 30s and 31s. So these two prices here were our absorption area here. We saw it at both those prices. We did see it a little bit lower as well, but that was the main entry point. So what we did in this specific trade is we joined the offer. That was the first thing we did. Our stop loss was very, very tight. This is the beauty about trading price action. Our stop loss was 1 to 2 ticks. We never wanted to go above that area. So if we were entering short, 31s, our stop loss was essentially 33s. We had a 2 tick risk. And our target, I mean, it really does depend on the trade. It could be, if you want to take a really high probability trade, you could have gone out for, 2 ticks. You could have gone out for 1 tick for the extremely high probability, just a quick offer down. But if you're looking for potential, a little bit more risk reward, you could have been looking to get it out at 7s and 6s. So effectively on this trade, we took 6 ticks. That's a 3-to-1 risk reward on that trade. So, that is the strategy in itself. That was our stop loss. Our target, as we just said, was 6 ticks. But what we're looking for is, like we said, when selling exhausts. So that could be, 6 ticks. It could be 10 ticks. As we can see here, we got out a little bit earlier. It seems like the selling continued even a further 9 ticks lower. But if you were looking for a very high probability scalp really quickly and out of the market, you could have just been looking for those quick, 3, 4, 5, 6 ticks. And if you see the selling somewhat exhausted, see a little bit of a bounce, then you can start scaling out. It really depends. It's very discretionary. But identifying the actual absorption at that single level gave you that opportunity to get involved and have an edge in the very, very short term. Okay, so that's the short term. In the next couple of videos, we're going to look at trending absorption and contrarian-based absorption. Thank you.